to our YouTube channel and welcome to Coffee Chat, Real Estate.
Real talk.
And we are going to be here sharing all kinds of things to do with real estate. And when we say real talk, we mean real stories, real things that have happened to people, and we want to educate you, give you the most that we can. So I'm Wendy Richardson. I'm a real estate agent, and I have been in the business 18 years, Canada, California, and now in the Houston area. And I love what I do. Can't wait to share more with you. And this is?
Yeah, I'm Aaron Elam. I'm also a real estate agent. I've been doing it just under a year. I got to know Wendy a long time ago, and she convinced me to do this. So here I am. But I'm really excited to do this channel. We want to make sure people learn something because buying a home is such a overwhelming thing sometimes, and we want to make sure everyone feels good about that.
Absolutely. We are going to bring you industry experts from all areas. It's like a big puzzle piece. I tried mahjong yesterday. I don't think I know what that is, but it's a big puzzle piece. I can do puzzles. So we're going to bring home inspectors, home insurance, home warranty, title. And today we're going to talk about lending with my very dear friend. This is Monique Wyatt with Gibraltar Group, and she's going to share about her, how long she's been in the industry, what she does. And then Aaron and I are going to pepper her with questions that you want to know the answers to.
So, hello. Thank you so much for having me.
Yes.
I love the fact that we're here and we're doing this. And I think hopefully it'll reach a lot of people and help some people achieve the dream of being a homeowner.
Absolutely.
Yeah, sure.
So, I'm Monique Wyatt, and I have been in mortgage for almost 15 years. I'm a residential loan originator. So, I'm the first person you call when you are looking to buy a house and you need to talk about the money side of it. So I get to do a lot of work with Wendy and Aaron, and so I'm really happy to be here.
Awesome. You know, the first thing we do in a buyer consultation, like they pick the realtors first, that's us. But the second thing is we need to get our money right. We need to know and understand. So Aaron, what do you do to find your credit? Where do you go?
Well, I think a lot of people use a lot of different, apps. I think Credit Karma is probably one of the most, popular ones out there. I've been using it for years now. And you'll open it up and it kind of tracks your credit, tells you, you're a 730 or a 690 or whatever, you are. So like when I'm looking to buy a home, Monique, and I see my credit is, let's say 720, what does that mean with Credit Karma? And then when you're looking at a loan, what are you looking at?
So when we pull a credit report, we actually pull a credit report that's typically going to be a lot more in depth than what you would find on Credit Karma. They're considered a mortgage credit report. So if you go look and to shop a car, the credit report that you're going to get for your car is going to be slightly different than your mortgage credit report.
Oh, okay. I didn't
So
even
there
know
are
that.
a lot of different algorithms that go into play in the type of credit that's being pulled. So for a mortgage credit report, it's going to be the most probably specific and stringent one, which is why it's common for people to get a mortgage credit report and find that their scores are actually lower than what they thought they were.
Yeah.
And they might not even know what's on that report, like as far as if there's derogatories or things that they maybe didn't even know existed.
Is there like a number that you least want to be around when you're,
So the rule of thumb for the longest time has been having around a 620 just to get in the door.
Okay.
Where you're not, it's going to be the most smoothest rather than if you were in the high 500s, which you could do. But soon that may be changing, but we'll have to hold on to that.
I want to know what that means. Like we talked a little bit like credit worthiness we're kind of hearing about, and maybe looking at more factors than just the credit, because a lot of folks are nervous about the credit part.
Yeah. And so they're coming up with something new called a Vantage score. And then also they are looking at getting like kind of just being a little bit more looking at profile rather than the number of the score. So but the important thing is going to be making sure you pay your bills on time and try not to have a lot of collections. And I mean, the big thing is going to be keeping those things from being delayed.
No, I really appreciate that. And I want you to know, Monique has helped my clients that didn't really understand what was going on with their credit, with what was happening with their credit. And come to find out, they did have, and Monique created strategies. They gave them a whole, I think it took about 8 months almost to get them there, but she created a strategy on how to improve, and then you would run that credit score again. Because does your credit get hurt every time you run it when you're trying to buy a house?
So yeah, I mean, if you do a hard pull, yes, you're going to have a hard hit on your credit. Now, a hard pull, now again, it depends on your particular profile, right? How bad it affects you. But generally speaking, a hard pull is going to be a few points.
Okay.
And then if you just continue to work on doing the good things on your credit over the next few months, those few points won't matter, especially if we've taken other steps to improve it.
Yeah.
So then in a few months when we re-pull it, that hard hit doesn't matter because we've done other things and now your score might be higher. But we do offer to do a soft inquiry in the beginning nowadays. It's not the most accurate. I mean, generally speaking, we're getting 2 bureaus instead of all 3, which is the difference between a soft pull and a hard hit.
But it might be what they need just to get a sense of.
Yes. And to be clear, I'm not a credit repair person.
No, there are companies that do that.
Yes, and if you know, depending on the depth of it, if it's a matter of paying a few things off or paying off an installment or something, things like that. But if you've got a lot of collections and things where it's a little bit more in depth, then I would definitely recommend credit repair for that, which might be a great show.
Yeah.
No, I was just thinking that might be someone else that we do want to have. Okay, so now we've worked on our credit. What about my debts? Like I have a big truck, I have a car payment, I have a loan, I have credit cards, and how does that work with my income? And I hear about these ratios. Like I stay in my lane in real estate. I let you do your lane, but can you share with our folks what does that mean to them?
So you're referring to what we call the debt to income ratio, and that debt to income ratio is it's a division of your income per month.
Okay.
And what your monthly liabilities are. So what you're paying each month as a minimum payment on your credit. So some people are like, oh, I have like $50,000 in debt. And I was like, okay, but what are you paying each month on that? And then we take that with what your potential monthly payment will be on your new house, including taxes, insurance, principal and interest, and your HOA or mortgage insurance if you have it. And we come up with a factor by dividing that out, and that gives us what we call our debt to income ratio.
Okay.
And we want to keep that, if you want to buy a house, under 50%. So we're talking 50% of your income needs to be able to cover your bills on your credit, excuse me, everything that comes up on your credit, and what your potential monthly payment will be. And as long as we can keep it under that, then that's how we determine how much house you can buy or what your loan amount could be.
So that's where you help us as realtors as well to know kind of our sales price, like what, because we build the parameters, we build the portals. So once you've kind of gone through their credit worthiness, that portion, then you're looking at the income to debt ratio. You can kind of give us a sense of where they would be comfortable with the debts they have. Do you ever recommend for them to decrease some of those debts to change any of those parameters?
Yes, if it's a matter of like, hey, we find this house, we're in love with it, which happens a lot.
Yes, it does.
And I'm like, okay, well, our numbers are super tight. Let's get the tax information. Let's get an estimate for your homeowner's insurance and see where we are with the numbers. But if we're close, just not enough to get that ratio where it needs to be, then maybe we pay off a credit card, or maybe we pay off if you can afford to pay off a car note or something like that, which has happened a lot where people have got the funds. We'll just pay that note off, and then now we can make room for that house that you love.
I love it, because those are things that we do need to know ahead of time.
All right, so we talked about credit. Let's say credit's looking pretty good, the debt ratio is looking favorable, but there's the down payment. So let's just it's a new home buyer and they have a townhome and everything's kind of checking out. Let's say it's like $250,000. Like, what down payment do they have to do just for that? I know there's more to what they have to put down when they close, but just focusing on the down payment part.
So there are a lot of options out there. And not everybody qualifies for all of them.
Right.
We'll just put that out there. There's some zero things down out there. But the most frequent, the most common average down payment, especially first-time homebuyer opportunity, would be a minimum of 3.5%.
And that's of the sales price.
So what you're buying the house for.
Okay.
And that would be generally the actual down payment for the house. And there are options out there in the event that there are people who maybe need a little help with that. A lot of first-time home buyer or even non-first-time home buyer. You don't have to be first-time home buyer to get assistance.
Oh, really? I always thought like that was kind of like that was the category was
No,
first time
there
home.
are
So if
definitely
they
assistance out there.
qualify,
If they qualify, and there's income and location and all those things that factor into whether they qualify for the assistance. But you don't have to be first-time home buyer for that.
that's really
interesting.
cool.
Did you know?
No,
That's
there.
why you're
I
a
know that there's
professional.
other
Yeah.
programs.
Yeah.
The other thing too, for you to remember as a buyer, so you're gonna when you write your offer, we have our nice pre-qualification, and we've got our letter, but you will put your earnest money down. Your earnest money is usually around 1%, but that contributes to your down payment.
Mhm.
So when you get to the closing table, that part will
You already get some
be
down.
there.
Yeah.
Yeah. So closing.
We're gonna credit you all the money you put toward
Yeah,
the purchase
yes,
of the
it does,
house.
So closing costs. So we've got our down payment now. We've figured that
Yeah.
part out a little bit. So now I'm just like, okay, I'm done.
Yeah. Got my
Am
down
I
payment.
done? I just want my
Yeah.
keys now. I've got my credit. I've got my house. I got my down payment. What do I need for closing costs?
So this is fun. Sometimes having the conversation with clients that they are not also preparing themselves for
Yeah.
what else they are going to need to close on the house.
Yeah.
Just bringing the down payment is not all of it.
That's not it. Yeah.
So we have our what I call cash to close, which is what I want to explain how much you're going to need to buy the house. Let's just say you're writing the check, all in. This is the amount you have to write the check for in order to sign those closing documents.
Yeah.
And that check is going to comprise of 3 different things.
Okay.
So it's going to be first your down payment, which we're all
we're comfortable there.
It's going to be your closing costs.
Okay.
And these are costs that are going to be required to buy the house. This is the what you pay the title company to do the job, what your mortgage company fees are.
Yeah.
Anything that's entailed to
Appraisal
make
fee.
that purchase of the house happen.
Yeah.
All the people involved gotta have their pay, right? And then in that, you're also going to be considered anything that's associated with the house specifically, like if you're in an HOA and you have a transfer fee, we got to know those costs. If you're going to have to get a survey for the property,
correct.
All of those are going to be involved, and those are the responsibility of the buyer generally. The closing costs, and then the third thing is going to be your prepaid items and your escrows. So
what is that?
Let me explain.
What are those prepaid items and escrows?
So your prepaid item is actually going to be. It's mostly made up of your homeowner's insurance. You're going to prepay your homeowner's insurance for a whole year.
So the 12 months will be.
Yes. So when you close, let's say this is January right now. We're recording this. If we close this month, we're going to pay homeowner's insurance just like you have car insurance.
Yeah.
Right.
We're going to prepay for January 2026 through January 2027.
Wow, and that's at closing.
And
so
that can be a couple $1,000.
That could be very expensive.
Correct.
To add onto your list.
Correct. And then if we're establishing an escrow account, which a lot of people do, most people do, we have to collect a few months reserves for that. So taxes and your insurance, for the bills to be paid by the lender each year.
So it really does add up. And the way that Monique said it is great, but you're going to get a whole CD. It's a disclosure statement for you. And that is 3 days before you close. You're going to see all those credits and debits, seller, buyer. And when you said cash to close, it actually says the last line, buyer to cash to close.
Yeah.
And that makes our closing go a lot smoother. When you do get to that closing table, there's a lot easier when you kind of know those numbers ahead of time. And there's any questions. What I love about Monique too, for all of us, no question's ever a dumb question when it comes to real estate.
Right.
We want you to ask everything, and we have the experts at our disposal to help you with what we don't know. So do people ever make mistakes?
Yes.
Yeah.
Aaron, what do you think mistakes a buyer might make?
I don't know. So I think a lot of people are really excited. Like, let's say they're, we're this far and, they're great, their credit, they got the loan.
Closing,
we got the closing disclosure.
But I would think a lot of people moving into their first home might need new furniture. They might need a washer and dryer. They might need a refrigerator. And they're of course they're excited, and they got this great Home Depot card. They're thinking, I'll get everything through Home Depot. Why would
he's reading my mind right now? I totally.
Why would it maybe be
I feel like
wise?
this has happened before.
Yeah.
You think?
Why would it be smart maybe to wait before and then let everything settle first before you get your credit card?
Well, so what we do at the end of the process is kind of do that soft pull on their credit, like
Because
we
you do
talked
it
about
again,
before.
right?
At the end,
Yeah.
And at the end, if there have been any changes, it's going to come up, and then we have to update the credit report. And a decision like that can increase your balance on the card, which will then in turn increase what else?
Your debt.
Your monthly payment.
Your monthly payment, which will
my
and then
gosh.
And then when your monthly
that
payment
ratio.
increases,
Yeah.
now your ratios increase.
Yeah.
My 50% just went up.
Yeah.
Over 50%. And now the loan doesn't work.
Yeah.
And so that would be definitely why one huge reason why to hold off on something like that. Also in that instance, you could see the score drop.
Yeah.
Oh, true. My credit score could go down because I've just added more debt to my credit card.
Yes. Yep. And then now your rate goes down. Now and then your monthly payment goes up. Yeah. And that also hurts your ratio. So it can be a whole on domino effect if you don't. If you do something like that specifically, it's same with buying the car.
Be patient.
Yeah. I've had clients like just ready to hit like cart,
Submit.
But we've always said wait
wait
until we're done.
Yeah.
What other stories do you have for us? Like you're in a wild business, or people think I'm paying all cash, or I've got my uncle's going to gift me $50,000, or like how what have you seen in the industry that you're kind of
cash is a big one. A lot of people who want to. I mean, look, in the world they say cash is king, right?
I hear that all the time.
In the mortgage industry, cash has to be traced.
Yes.
Vetted.
We gotta
where
know
is this
where
cash?
it came from.
For obvious reasons.
Your mattress is not a valid source.
I found $50,000.
It's got to come from your work, like your paycheck. It's
Yes.
got to come from like there are certain, let's say you sold a car, you have a bill of sale, we can trace that sale of car to a valid sell. Certain things like that we can trace, right? If it is a gift from a family member, we can trace that. But if you do get that, talk to the lender first, because there's easier ways to trace those things than just putting the money in. But cash is not a valid source. So anytime cash is large deposits in your account, they have to back that out. It could totally affect how much money we have.
People don't know that because you do think it's cash. And what does it mean to be seasoned money? Like if someone did give me something, is there like a time where it's in my account that you don't worry about it?
So the mortgage industry requires 60 days or 2 months bank statements in the file prior to closing. So 2 months prior to closing, we're going to get bank statements for those 2 months.
Okay, so that all helps. And I know you have like a whole team. It's not just you by yourself. There's different areas, and there's these underwriters are going to be asking for your blood, sweat, tears. Like you're going to be, you think it's a simple process, and you think you're almost there, and then 5 more questions.
And I want to mention 2 other things on the mistakes people have made. One is going to be back to the cash to close, because people spent the money.
Oh no.
We'll get the bank statement, and now somehow the money that we need for that cash to close is gone. We can't. Maybe they're $3,000 under, and we're like, we got to come up with $3,000. That's traceable, right?
Yes.
So that's a big thing. I've seen that happen. And then the other thing is changing jobs.
Because you have to verify their income, right?
So and that's an in-depth conversation too. It's kind of like because sometimes it can be if you do it right. If your salary and there's certain criteria where it could work, but a lot of the criteria it doesn't work. So if you're going to change your jobs, you've really got to have that conversation with your loan or whoever you're working with first.
But these are things they have to think about right from the beginning. Like they need to know about the reserves and the money, and don't buy the car and the truck and like these are things in the conversations like early on, because we want to avoid these mistakes, and we want you guys to get to the big key happy dance with us and get to that closing table.
Get that new home.
Okay, Aaron, what are your nuggets?
A lot.
Like,
Yeah.
this is a big topic,
this
and we
is.
so
I
appreciate
mean,
it.
a lot
We're
to it.
scratching
I
the
got
so much
surface.
more.
I
could just
know.
keep
Yeah.
going
We might do a
going.
part 2 on this.
So yeah, it sounds like you want to know where your credit is. At least
Yes.
have an idea before going.
With
in.
my Credit Karma.
Yeah, Credit Karma is a good.
It's a start.
It's a tool, but it's not the tool. You
Yep.
want to maybe pull from more sources. You want to look at your debt. You want to see how much debt you have. So because Monique was saying, there's a rate where they're looking at, and you need to be there before they feel good about handing you that money. And then we also need to make sure we know exactly how much money we have and where it's coming. So if my Aunt Jana was nice enough to give me a $50,000
Oh, we love Aunt Jana. Thank you, Aunt Jana.
even though that's but you need to make sure you know where that's coming from.
Right.
So it sounds like at the end of the day what I'm hearing is communication's really key.
Oh, 100%.
Yeah, making
100%.
sure the realtor, and we're going to obviously,
especially if you can trust the loan officer.
Yes.
I mean, some people try to no, they try to hide things.
Yeah.
From the loan officer.
Don't do that. Make sure you're transparent. Tell everything.
They're gonna find out.
Yep.
And it's better to know ahead of time so things can be navigated correctly to make it work than to find out in the middle of the process that's gonna screw up the whole loan, and now you've lost your earnest money.
Yeah.
And you
all
can't
this
buy the
time.
house.
Yeah.
Our goal today really is to set you up for success.
Yeah.
And this is why we're doing this. And I want to thank Monique
so
much that you have fun.
Yeah.
So I want to thank you so much for being amazing, for helping all of our clients and everyone, and helping educate. And we might do a part 2.
Well, you two are amazing too.
What?
And I have enjoyed working with you guys so
Yeah,
much.
of course.
And I look forward to more, and maybe somebody from
all
here.
right. We're almost on our coffee. So coffee chat, real estate.
Real talk.
We'll be back soon.
All
See you
right.
soon.
Bye,
Thank you guys.